Most people assume that when a company starts spending aggressively, something must be wrong. Margins compress, free cash flow drops, executives start talking about long-term vision. That's usually the prelude to a problem. So when Meta began openly committing tens of billions of dollars a year to infrastructure, numbers so large that they make even seasoned investors uncomfortable, the instinctive reaction was skepticism. Why would one of the most profitable businesses in history voluntarily make itself look worse on paper? The answer isn't desperation, it's intention. Meta isn't trying to protect what it has. It's trying to remain relevant in an environment where relevance is no longer cheap. And once you see that, the spending stops looking reckless and starts looking inevitable. This isn't a bet on hype. It's a recognition that the next decade won't reward companies that optimize for smooth earnings. It will reward the ones that can tolerate prolonged discomfort without being forced to retreat. Infrastructure, not efficiency, becomes the moat. Meta is pulling pain forward, choosing to look undisciplined now so it doesn't have to become obsolete later. That decision feels alien to most individuals, even very successful ones, because personal capital is usually managed in the opposite direction. We smooth outcomes, we minimize volatility, we protect the present. And in doing so, we quietly give up endurance. Meta isn't optimizing for this year. It's optimizing for the right to still matter when the rules change again. That's the part that's easy to miss if you're trained to think in annual cycles. And it leaves a question hanging in the air. One that's uncomfortable to ask, but hard to ignore once you notice it. If you never allow your capital to feel uncomfortable, how do you expect it to survive an uncomfortable future?